introducing, my name is Andrias. I'm a tax partner. I'm based in Indonesia, but I heavily involved in the M&A, having many investors actually to invest in Indonesia. So we are working closely with other offices in the region, such as Hong Kong, Singapore, and other countries as well. So I think the earlier presenter, Pak Mandala, Pak Iqbal, and Pak Andi has been talking about the Indonesian economy. Well, actually, my slide also covers that, but I think I will just skip it. But I think in terms of the message has been consistent presented is that I think the Indonesian economy and the growth and also policy has gone to the right directions. It has been showing a stability as well as resilience for the last few years, despite about the global economic challenge as well as the regional. So as you can see, as the largest economy in Southeast Asia, the stability of the GT and everything has been steady. And I think the key here surely from the tax perspective that I would like to share is more on that, the importance of the tax revenue to support the the state budget, right? So if we look at the history for the last few years, I think the contribution of tax revenue to the overall state budget almost 80 to 90%. So why tax? And then this is also has been covered earlier. So there are so many policy has been issued by the Indonesian government in the last few years actually to support the investment to Indonesia, to give some certainty for the investor as well as to create a quiet, friendly environment for the investor. So I will just skip this because again this has been covered, but I think if later on we do have a Q&A session, then more than happy to attend, right? So why tax is important, right? Because I think as a businessman, when you are talking about business, you must be much smarter than your consultant or anybody else, right? But sometimes when you are really focused on operational and then you forgot some other area like tax, for instance, then you may end up at the end of the day, you need to pay tax unnecessary or pay tax highly, and then it will reduce your profitability at the end of the day, this is something that you would like to avoid later on, right? So I think before we go on to that directions or to that part, let me just give you sort of like a brief overview about when you would like to do investment in Indonesia, what kind of form of business that you may have in Indonesia. Yeah. So I think the common one will be the subsidiary, right? It really depends on your objective, whether there will be long-term investment, whether it will be short-term, what are the activities that you would expect in doing business in Indonesia. There are some form that you can use. One is actually the subsidiary. Subsidiary, basically you set up a company in Indonesia and it will follow the normal procedure. Secondly is branch, but branch at this moment is limited only to banks. So not only in all of industry actually can set up branch in Indonesia. And then you may have also do business through representative office. Basically, representative office, in a nutshell, your activity will be limited to auxiliary type of activities. But if you would like to do some trade or public work rep office, it is also doable for construction type of services. This one is more on the oil and gas business. You can do in the form of production sharing contract. It's more on the contractual agreement with the government. And in the last one is actually indirect. So it really depends on the objective. So let's say if you haven't really decided to go directly to Indonesia, you can appoint distributor in Indonesia or sole agent, etc. Right? So again, this will be depends some consideration that you need to consider. One is your proposed operation activities, duration of presence, and then time frame and minimum investment plan. Like for instance, like subsidiary. If you would like to set up subsidiary in Indonesia, you need to have minimum investment plan about 10 billion. I think roughly about 700 thousand US dollar. Okay. So this is more on the activities that I explained earlier. So let's say if you have subsidiary, the expected activities will be very commercial, duration of operation will be very long, and then they may be subject to minimum investment requirements. And then if you go to the left side, the right side, then right representative office, it could be do commercial and non-commercial activities, and the duration of for or present could be long or short. So again, it really you need to really know what you want to do, because again, let's say if your activity is not really like heavy activities, I think there is no point for you to have a subsidiary in Indonesia. And on the other hand, if you really want to have long-term investment, you cannot create a representative office. It's better for you to have a subsidiary, because each form of business, they will have different tax implication. So you need to really to understand that, so that at the end of the day, you may only pay tax which is efficient and unnecessary to pay unnecessary tax costs, right? And in terms of the financing, so when you set up a company, the question will be whether it should be like a fully in equity, or it could be a combination of loan as well. So it could be a combination. So by rule of thumb, the minimum is 3.3 to 1 debt to equity ratio, right? But I think if you would like to utilize certain benefit, like the tax holiday, which has been briefly outlined by Pa Mandala, then you need to also to subject to the BKPM rules on the debt to equity ratio could be 4 to 1, yeah. Right. So that is actually the general form if you would like to invest in Indonesia. So again, I will talk about tax, but it will not really details considering the time. But again, I'm more than happy to attend any question later on after this. But this one is only like a nutshell on the taxation system in Indonesia. But before we went on to that, I think it will be also benefit for us to understand about the outlook of the taxation policy in Indonesia. So the tax reform has been carried out since 2015. There are some money policy has been done by the tax authority to improve the system, as well as to provide more comprehensive services actually to the taxpayer. There are 5 areas which has been really focusing in the last few years. One is the organization, in which that the tax authority is actually try to enhance the system so that they actually can serve the taxpayer better. And in the second one is actually in the human resources area. They have been spending so much money actually try to enhance and to upskill the people. They're sending people across the country. Like again, because they are dealing with multinational companies, so that to making sure that they also quite sophisticated in their approach. IT and database, I think this is something that is given because of the hands-on of the technology. The Indonesian tax authority also has been enhancing this technology. So they have introduced so many systems, and then at this moment actually you can file your tax return online basis. And then they also try to have a direct link to certain taxpayer, so that whatever that you report, they actually can see online on online basis, right? The business process, yeah. Again, because they try to leverage the IT, so that now I think in terms of the provision of services, they can do it more efficiently than before, yeah. And the law and the regulations, because in the past they know some of the tax issue is actually one of the issues because of how to interpret law, right? Because if you're talking about lawyer, one word actually can be interpreted 100, right? So this is also similar to tax. So what they actually to do to minimize any dispute in the future, they have been trying actually to hands-on the regulations so that it provide more clear direction to the taxpayer and to give more certainty to the investor. Okay. So the strategy actually for them to go to the 5 pillars, actually they look at 4. One is providing service and counseling. Again, this is the area to cover, to achieve the 5 pillars earlier. Data management and processing, extensification, monitoring, audit, and increase organization capacity. Yeah. So this is a brief information about how the Indonesians tax on the income, right? Indonesia has 67 tax treaties. For those who are not familiar, treaties is actually government-to-government agreement, right? Fortunately, Hong Kong is the best treaty that Indonesia ever has. In the past, when people would like to invest, they're using Netherlands, for instance, to invest in Indonesia, or the most common one, Singapore, right? But since the last few years, when the treaty in Indonesia has been renegotiated, then the treaty features between Indonesia and Hong Kong is the best. For instance, if Indonesian company pay dividend to Hong Kong, it's only 5%. Other country perhaps it's about 10 to 15, etc. Royalty will be also the same. If Indonesian paying royalty to Hong Kong, many countries the rate will be around 10 to 15, but in Hong Kong, Indonesia is only 5%. So that's the best tax treaty that Indonesia ever had compared to other 66 countries. Yeah. So it's no wonder at this moment, actually, many countries, I think including also Singapore, has been trying to negotiating with Indonesian government to revisit the treaty itself. Yeah, but it's not solved anymore. Oh, not yet. But now it's like Indonesia and Hong Kong is the best treaty that Indonesia ever had. Okay. So scope of charges. Indonesia adopt what they call is worldwide income basis. So if you are Indonesian tax resident, including if you have a company incorporated in Indonesia, your income will be taxed in Indonesia. Either it's coming from Indonesian source or non-Indonesian source. Yeah, so the concept is not like Hong Kong. Hong Kong is territorial basis. Only Hong Kong source of income will be taxed in Hong Kong. But Indonesia, what they call is worldwide income basis. For non-Indonesian resident, they will only be taxed on the income which is Indonesian source. Yeah. We have what we call is self-assessment system. So it is encouraged for any Indonesian tax resident to calculate and report and file the tax return by their own. So it's not an official assessment system like other countries, for instance, like Singapore. You compute your tax and then you come to the tax authority, they will verify it, and then after that they can say that whether it is okay or not okay, right? But Indonesia, you file it first. But of course later on, they can review your computation, and if they feel that the computation is incorrect, then they will have a discussion with you on that one or conduct an audit. Yeah. Statute of limitations. So when you file your tax return, let's say this is now is for 2018, the statute of limitation is 5 years, meaning within 5 years, the tax authority can come and challenge or at least can pose a question whether your calculation is correct or not correct. But if it is exceed 5 years, then whatever your calculation has been considered correct, and they have no right actually to check and challenge your calculation anymore. Yeah. The statute of limitation can be extended to 10 years if, let's say, you are considered committed to tax crime, but it's very rare at this moment. Yeah. Tax losses. If you have a company and you're making losses, your loss can be carried forward to the following period. So let's say this year you're making loss $1 million US, and the following years you profit 2 million. So you only paying tax as a tax basis is 2 minus 1 million US. So meaning your losses can be carried forward for the next 5 years. And this is also very important. In other country, if a company has losses and the shareholder of the company, there is a changes of the shareholder, your losses cannot be utilized anymore. Yeah? Indonesia doesn't adopt that concept. So whether the shareholder change very frequent, it will not change the ability for the company to utilize the losses going forward. Okay. So type of taxes, I think is almost similar to other countries. We do have the corporate income taxes, and some of we do also have a VAT. Yeah. But now recently the government has issued another incentive for the VAT. So for Indonesian company provide export services, the VAT, in the past it's always subject to 10% VAT, is now 0% VAT. Yeah. So it's actually to encourage the Indonesian company also to provide service overseas. Tax rate, we do have a flat rate of 25% corporate income tax rate. This is the normal one. If you are if your company is listed and then you met certain qualification, then your tax rate can be reduced by 5%, so that the effective rate of your corporate income tax is only 20%. Individual, if you have employee, the income tax rate will be ranging from 5 to 30%, the maximum one. And withholding tax, again, for domestic is 15, withholding tax, 2 to 15. Offshore is always 20. So let's say Indonesia, a Cayman entity invests in Indonesia. When Indonesia distribute dividend to Cayman, it's always subject 20%. But again, because Hong Kong and Indonesia has treaty, it's only 5%. Yeah. VAT rate is also 0 to 10%. I think this is something that has been, I think this is the opportunity, because at this moment the term is actually talking about what are the opportunities that can be provided from tax point of view. So this has been briefly also discussed by Pak Mandala and also Pak Iqbal. There are so many incentives provided at this moment, but I think the very appealing one will be the tax holiday, tax allowance, and those are related to import duty exemptions. Yeah. So tax holiday, basically, the government say that if you are engaged in pioneer industry and you meet certain requirement, you may not pay tax for the next 5 to 20 years. Zero tax. Yeah, but of course there are certain requirements, and it really depends on how much actually the investment commitment that you made to Indonesia. Yeah, so let's say if your investment is only about 100 billion Indonesia rupiah, and then you may be exempt for tax for the next 5 years. So, but if you increase your investment, let's say 1 trillion or 2 trillion, 30 trillion, then you may not pay tax for the next 20 years in Indonesia. Okay. And in the past, the process is actually quite sophisticated, but I think has been introduced or explained by Pak Iqbal. The process of what we call in OSS, the online system, actually fasten all the process. So now if you would like to file the tax holiday, I think within reasonable days, and then you can get the answer already. In the past, because I've witnessed the process, if you would like, because the tax holiday has been introduced back in 2010. So there are 3 periods, 2010 to 15, 15, 18, 18 to 19. In the past, the process is quite sophisticated. It's not really friendly per se. But because of the government commitment actually to enhance the process, recently they issued, and then all the process actually can be fastened only between few weeks, and then you can get the answer already. The allowance is quite different with the holiday, but the allowance is in terms of requirement is less comprehensive, but you can still get 30% deduction of your corporate income tax. Yeah. For your, in total of your 30%, your investment plan. So again, it's still, and then you can also accelerate the depreciation of certain fixed asset. So it will help you actually in terms of your business. And the last one is actually the import duty facilities. Indonesia, I think in the last few years, for those engaged in manufacturing company, if you would like to import, then you can use what they call is master list facilities. So your import, custom duty, and everything could be 0. Yeah. So all of this is actually, again, I think if we look at that one, there are some facilities has been discussed because the government knows the importance of actually to make the Indonesia more competitive in the region. So there are the commitment from the government actually to give more incentive to the taxpayer, but it will be very selective and targeted one. Because no point for you actually to provide any incentive which at the end of the day is not fruitful anymore. So again, I think in terms of this slide actually, will provide you with the most significant incentive that has been provided by the Indonesian government. The last two slides is just to give you sort of like that, the anti-avoidance rule. Indonesia have anti-avoidance rule, which basically, I think this is consistent with the global development, the OECD initiative, etc., in which that they will not allow for you actually to erode some of the profit to other country, without a proper process, etc. Yeah. So transfer pricing as well is something that you need to also to take care. This is more, those are relating to your group transaction. So this slide is actually will conclude my presentation. I hope it is useful. Again, this is a very brief. I'm more than happy to attend any question later on if you have any. Thank you.